Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell, your home for actionable pre-market content. It is Wednesday, the 8th of June, 7 o'clock straight up as I'm starting the video. And as always, please run your player at 1.5x. I, for some reason, am running late out of the gate. So I'm going to dispense with the futures and the macro and the earnings. You can get all that on the blog site this morning. We are down a little bit on futures. Oil is up about 1%. I thought that was notable. So let's plow through our charts quickly so I can get this video rendered and get it to you in time for you to digest it and get your pre-market plan together. Had a nice day yesterday, up about 1%. But from a technical standpoint, we're just ping-ponging in this area between the 8 and the 20 and the 50 EMA. I think on the upside, I mean, it's pretty simple. In order to make some real progress, we got to take out the 50 and make a run towards this open gap and the 200. Without that, it's just going to be chop. We've had alternating up and down days for over a week, so we really have not made a ton of progress. You can see on the detail here, we opened low. Notice how the top of this gap has worked so well as support and a buy point. We actually talked about that yesterday. Tag of this 407.70, and then pretty much that was all she wrote. Right back on up towards the top of the range. You had a great, if you missed that entry there, you had a great buy point at 410, and really no candles to give you worry or pause or shakeout, anything like that. Right up to the top. We've yet to fill this gap. I've got the top of that gap at 417.38, and remember, we've got the 50 right above that. If we were to make progress and break out of there, little resistance here just below 420, and then we've got a couple levels up towards this bigger $4 gap between 425 and 429. Now, the title of this morning's piece is "This Rally is on Borrowed Time." I really think that it is. We've got 4 big events coming up in the next 10 days that are going to be critical. Number 1, inflation print Friday morning. That's a real wild card. It could come in hot. It could come in line. We could have a downside surprise. I think there's more chance of an upside surprise than a downside surprise. But again, it's the market reaction that really matters. We've got a huge VIX expiration on Wednesday morning. I think that contract closes out at 10 a.m. You may want to check that. But that could be a stimulus for a rally into the Fed, which is at 2 o'clock. There'll be a lot of volatility after that. And then we've got a massive expiration on Friday the 17th for the June option cycle. And as we've seen in the past, these option cycles can be real pivot points in the market. And I think it would be tough, holding a ton of longs into the FOMC and over the weekend after that OPEX. So I really think if this rally is going to do something, it needs to do it pretty quick. So taking a look at the Qs, same deal. Bottom of the range, top of the range. We got stopped right here at 310 yesterday with a gap above. In order to get anything going realistically, you got to take out 310, go up here, take out 312, and fill that gap to 314. If it can do that, it would open the door to this bigger resistance area between 317.50 and 322. IWM has been a different story. It's been leading the pack, outperforming the other two indexes. You can see here, while there's been some oscillation, with each cycle it has resolved to higher highs and higher lows. So IWM, from a technical standpoint, has been the strongest of the three. And you can see here, we decisively took out the 50 yesterday and closed well above it. So if you wanted to stop, you could use the 50 EMA, which comes in at 188. Let's call it 188.50. If price can stay above that, I think the door is open for higher. If it can take out yesterday's high, I think we can make a run towards this downtrend line that comes in like 196. We can see it here. Really important, we've got what amounts to a $3 gap that starts at about 191.50. So I think you definitely want to have that alarmed in your system. If price takes that out, make sure you're long with a chance for a $3 push up into the gap and to close the gap. Moving on to Facebook. Pretty clear. We've had multiple rejections at the bottom of the gap. So I think you've got to have 196.61 alarmed in your system for that gap entry and a potential push higher towards 204. On a lot of these charts, I've dropped in a uptrend line off of the recent lows, and I think that'll be a good benchmark level for you to stay long against hopefully as price rises. Any pullbacks would be contained by the uptrend line, and breaks below trend would obviously open the door to a pullback to a certain degree, and that may mark the end of a rally in these particular names if the 1 hour uptrend line is violated. And I think it's a pretty good line. We've got some touches down here, we've got a touch here, touches containing price all along the way. So I think that trend line should be fairly robust. You can see I've got the trend line here on Apple as well. We made a little move into the gap at the close yesterday. So the door is open above 148 to close that gap up to 151. And then at that point, there'll be a big decision to make whether it has the power to break out and move up to 153.50 and beyond. Tesla, very clear chart. You can see that in recent days, 720 has been a problem. Look at all the touches, all the rejections right along that line. So I think 720 is your clear pivot. Above, you can be long, looking for 735 and the bottom of the gap here at 743. If it can't take out 720, it's going to leave price vulnerable to a pullback down to 700. And then again, I think 700 is a big, big line on Tesla's chart. You can see that we've had this consolidation in this $20 range. And so if we break that support, you can see this is where the high volume over price bars are containing price to the upside and supporting price to the downside. So just on a measured move basis, a breakout above would measure $20, so that would get you up to $740, but a breakdown would open the door down towards $680, $670, where you had your next line of support, and you can see there was some reactions at $670. So as far as Tesla goes, I think you have two alarms in your system, one at 720 and one at 700. Microsoft basically trapped in a range between, let's call it 269 and 274. That gives you a $5 trading range. Breaks below. Here are some intermediate targets, but $5 measured move would say come back to 264 at this low. A breakout above 274 would point towards 279, 280. So right here in the middle, I don't think you really have a trade. I would be setting my alarm at 274 and 269. Yesterday, again, you didn't have a lot of time, but you got a back touch of support and the large volume over price bar at 266. If you got it there, congratulations, great trade, great objective trade, with a stop just below. Your second opportunity was on a reclaim of 269, and then right on up it went. So that should have been a nice trade for you. Amazon really didn't participate yesterday. We're in here in this old gap. I think you've got an alarm here at 124. I think that's your upside pivot. If price were to lose 122.50, I think you could come down here to 121. I think your real line in the sand on the downside is 120. You can see touches here. Had a reach down, didn't make it, but I think 120 would be a much better place if you're thinking about a short than trying to do anything right up in this area. I think this one at 120 would be a much better entry to the downside. You've got a void in the chart, and you've got some running room down to 115. So I think from a risk-reward standpoint, a lot better trade than trying to get cute up in this area here. Google, same kind of look. We're right here in the middle of this range. I don't think you really have a trade. What I'd like to see you do is alarm the top of the gap at 23.23. If you can get a pullback into that area, or even a pullback into 22.91 that holds, then you can try along there. Otherwise, I think you got to wait for a breakout above this 23.70 area, which would open the door to higher prices. Or if price, if the market is real weak, I think you need to have an alarm at 22.75. If it breaks that, then I think you've got the potential for some decent downside back to this old gap, and we've still got an open gap down here that has yet to be filled. And I didn't do it on this particular chart, but you could easily take yourself and make a little trend line up off of this low, and you can see that it's going to come up, right in through here. So if you're on the long side, you want to be north of that trend line. Netflix. I changed the scaling on this because the way it was scaled before really wasn't giving us much resolution. So what I've done here is just mark that big gap up above that's off the scale. If Netflix is lucky enough or good enough to get up there, we'll adjust all that stuff and make it look pretty again. But here again, I've got a nice trend line off of the lows, touches here, touches here. I think you can stay long against that trend line, but if price were to lose this 195 that has acted as support and resistance along this line, I think you got to be concerned if you're on the long side, and that may be a place for an early short entry if you see, in the broader market, things are starting to fall apart. You're getting alarms across the board on your other FATMAAN names. You may want to take a shot there, or I think a more important line is probably this 187.50. Kind of, let things kind of play out, give up those few dollars, and if 187 breaks, I think then you've got $10 of downside here that I would imagine happens almost immediately, and then down towards 170 and a touch of this prior low down at 165. So, just talking through that with you, I think this 187 is probably a better risk-reward entry if you were going to try a short. Let some downside get going, see if it holds here. If it doesn't, you can set your stop right above, and I think you would get that $10 relatively quickly. Semis. Some real nice opportunities yesterday. We had been focused on this gap as a prominent feature of this little sequence we had going here, and yesterday we got a deep look down, almost touched the bottom of the gap, and if you were focused on it, you had to be quick, but there was a potential entry there, and maybe a more realistic entry was the recapture of 240. That had been a big line on the chart. You can see all these touches down to 240 that acted as support. We broke it, in the first hour of trading, and then we recaptured it. And if you took your entry there, you got a nice $4 push. And I mean, anytime you can get $4 on a intraday trade, I think you got to be quite pleased with that. Let's move on to ARK. I've got this trend line working here. We had a nice closing bar. I think if you got long yesterday, you can stay long against 1850. If you're not in, I think if you got a pullback to the trend line, you could try a long. I think the goal here is to simply fill this gap for starters. And if the stars align and we get a breakout above 1975, I think it can have room to run for another $1 or so up to 2050 or 2075 on the fintech names. ARKG peaked above This 32.75 on the close, I think that's your pivot for today. A lot different picture than the fintech one, where we had a nice uptrend line. This one has just been really oscillating in this $1.50, $1.75 range. If it can hold this breakout, you could see 34 and above. But if it falls below, then of course your downside target would be 31. Seems like a lot of work for what could potentially be $1.50. I mean, if this thing can't really rally with the up move off of the lows, is it really gonna do it now? There might be better places to focus your attention. ARK-K, trend line off the lows, nice push into the close. We still got this gap to fill. I think you can alarm, just the high of yesterday, 44.78, right at the bottom of the gap. If you get a push above, we can fill the gap up to, say, 45.75, and then if you get a breakout there, we could see 47. That's probably not going to happen unless you see, Tesla moving, Roku moving, the Qs moving. This is going to be your beta play. It was up 2.37%. I think the Qs were up a little less than 1%. So you can get some beta here if things are moving in the right direction. ARK-W, nice trend line off the lows. Just like ARK-K, we got a gap right here above. We actually got a double gap. We've got this gap up to 59.25, and then we got another gap right above it from 59.50 up to 61. So this one may be worth paying attention to get potentially, what is that? A $3 move. And then if the stars align, push up to 63. I doubt you'd see all that today. But if it starts closing these gaps, then you can move your stops up and stay long. See if we can get both of these gaps filled. And then if at some point it reverses, you'd want to stop out relatively quickly. Take your gains and reset after whatever pullback may occur. So I would be keeping that on a short leash. On the blog site today, a lot of information about energy. I reposted my thoughts from the note I sent you last night. If you missed that, I reposted it on the blog site along with quite a number of charts. Oil's up again today, 1%. As I started the video, who knows where it is now. All I can tell you is above 120, there is an open door up towards 125, and it's been volatile. We had $2 moves in oil yesterday, both to the upside and the downside. We cycled to lower support down at 118. We did that twice, from 120 to 118, back up to 120 at the close. I think there's a bid in the market, and I'm still an oil bull, but with caveats, and those caveats are posted on the website this morning. So don't get out too far over your skis. every village idiot is an oil bull now, and I don't like that sentiment, but at the same time, the fundamental backdrop for oil, energy, commodities, materials couldn't be stronger. So go to the bank early and often with your winners. Be prepared for that day that is going to come where everybody hits the eject button at the same time, and then we'll get a pullback and hopefully be able to buy that dip. I think until proven otherwise, I want to be leaning bullish on the energy, commodity, materials complex. So let's leave it there. Let me get this video out to you and rendered. Thank you so much for spending time with me. I hope the videos help. If you're new to the channel, hit the alarm button, hit the subscribe bell, hit the notification content, jump to the show notes, find that link where you can drop your email address in, join the team. That way you'll get my intraday comments, morning, noon, and night. Anything that I see worthwhile passing along, you'll be the first to know. It'd be great to have you. So let's wrap it up there. This has been Chris Buss with Traders Profit Compass. Talk to you next time.